Today on RoxomTV News, diplomacy is apparently happening at the exact same time missiles are still flying, with Iran and Israel trading strikes while Tehran openly mocks the idea that any deal even exists. The UK is considering a bill to protect children online by giving a single government official the power to decide what parts of the internet they're allowed to use, which is either thoughtful policy or the world's most polite way of installing an off switch. Meta gets hit with a $375 million verdict over child safety features, and in a move that feels almost on the nose, the stock goes up because nothing says accountability quite like a green candle. Roxom launches a way to trade oil directly against Bitcoin, no dollars involved, which is a subtle but very real shot at one of the longest standing rules in global finance. And in the middle of all of this, money isn't running to gold like it used to during crises. It's flowing into Bitcoin instead. I'm your host, Hank Hudson. Bitcoin is trading around $71,000, and we start today with breaking news, so let's get into it. Iran has just announced 5 conditions to end the war. Here's what they're currently asking for. Number 1, a complete halt to all strikes and assassinations. Number 2, guarantees the war won't be reimposed. 3, reparations. 4, an end to the war across all fronts, including all regional resistance groups. 5, international recognition of Iran's sovereign authority over the Strait of Hormuz. Now, Iran says talks won't happen until all 5 are met and that it won't accept a ceasefire, only an end to the war on its own terms. A change of tone after Trump declared yesterday that the U.S. was dominating Iran. Take a look.
You know, I don't like to say this. We've won this. This war has been won. The only one that likes to keep it going is the fake news. I mean, the New York Times, you read the New York Times, it's like, we're not winning a war where they have no Navy and they have no Air Force and they have no nothing. And we literally have planes flying over Tehran and other parts of their country. They can't do a thing about it.
Yesterday, the Pentagon ordered 2,000 to 3,000 paratroopers to deploy to the Middle East, drawn from the immediate response force that can mobilize anywhere in the world within 18 hours. Combined with 2 Marine units already moving toward the Persian Gulf, now we're talking 6,000 to 8,000 U.S. ground troops arriving in close proximity to Iran on top of the 50,000 American troops already in the region. And this comes as Trump's 5-day pause on power plant strikes expires on Saturday. More than 4,300 people have been killed in this conflict since the start of the war in late February. Moving on, as the Iran conflict drags on and talk of a potential deal starts to surface, a much less public part of the war is beginning to come into focus. Across Europe, governments that have spent weeks calling for restraint and diplomacy have also been quietly supporting U.S. military operations behind the scenes. According to the Wall Street Journal, bases in the UK, Germany, Portugal, and Italy have been used to refuel, arm, and deploy American bombers, drones, and naval forces throughout the conflict. So while European officials stood at podiums urging de-escalation, their infrastructure was helping keep the war machines running in real time. Now, with Trump signaling a deal could be days away and Tehran suggesting it may be open to talks, that dual role is becoming harder to ignore. Iran knows exactly which bases were used, which means any future negotiations with European governments will come with that context baked in. And that's where the strategy starts to look a little shaky here, because European leaders tried to align with Washington while avoiding the political cost of being seen as part of the war. If a ceasefire holds, they won't be negotiating from a neutral position. They'll be sitting across from a country that watched their runways support the conflict the entire time. And that tends to show up later in how cooperative or uncooperative those relationships ultimately become. All right, joining me to talk about this story and others this morning, the man that can connect the dots like no one else, Nolan Bauerle. Nolan, happy Wednesday. Always great having you on the show. How are you?
I'm enthusiastic about the future of humanity, other than a bulldozer that is near me. So if some screech comes through and I don't hear things, then just blame the bulldozer.
It's live media for you. Anything can happen. And speaking of anything can happen, we got some interesting news from the Iran conflict this morning as Iran laid out 5 non-negotiable conditions, including the control of the Strait of Hormuz. I would love to get your initial beat on what you heard here, because this kind of feels like less of a starting point and more like a line in the sand. From your perspective, Nolan, is this a serious negotiation framework, or is this maybe a strategic signal that they're not actually ready to end this war? Where are you landing on what we just heard?
No, I think the Americans have allowed the oil to go through the Strait of Hormuz. It never really closed. We had oil going to India, China, having a toll on the Strait of Hormuz and sovereignty there. I don't know if we can exactly negotiate that because there are implications for neighboring countries. So I don't know if America has the clout even to take that sovereignty away from Oman and the UAE, but certainly the territorial part near where the ships are going through now, they're not going through the typical strait, they're going closer to the Iranian shoreline. So I
Mm-hmm.
suspect it's fine. I don't see why the Americans would make that a kind of a deal breaker. As long
Mm-hmm.
as the oil is passing through the normal markets and you see a global price for oil, America really just wants to set the global price. That's really, to me anyway, what I'm seeing with the conflict in the Strait of Hormuz. It was about
Mm-hmm.
depriving Europe of its oil reserves and assets. Those are the countries that haven't been able to make it through.
Mm-hmm.
China and its sort of sphere of influence has had no problem accessing oil. America's gone so far as to take away the sanctions on Russian oil. So this looks more and more like the Venezuela deal. They're going to be able to rebuild with the money that comes from this commercial activity. I suspect this money will even be counted as some kind of extra funding for rebuilding and will be purpose
Mm-hmm.
made for the people of Iran. So it's a similar deal to what you saw in Venezuela. And as long as America can be the venue that sets oil prices, that's really what's been taken away from the United Kingdom over the duration of this conflict. If you look at the prices right now in oil, the Brent price is now about 15% out of line with the Texan price. And
Mm-hmm.
that really does mean that the United States is getting some degree of control and manipulation over the global prices, and it's not having to be shared with the London insurance dealers or the London futures market, which is really what the insurance was able to perpetuate. They can control the futures end of the market. That's
Mm-hmm.
being taken away.
You brought up the insurance angle of it, and I'd love to get your thoughts on something, Nolan, because I was watching online, and there's this guy I follow, and he gives like financial advice and talks about the geopolitics and kind of how all the dots connect, often like you do. And a case he made was that even after this conflict is eventually resolved, he made the argument that oil is forever going to be repriced. And he was saying, like, even after this ends, that insurance premiums are going to go up considerably because Iran has kind of shown, like, hey, we're willing to enforce things in the Strait of Hormuz. So my question is, again, I'm sure I'm butchering his explanation of it. Do you see oil coming back to the prices that we used to experience before this conflict? Or do you think we are kind of forever going to be experiencing high oil prices after we've seen what can happen in the Strait of Hormuz, specifically with Iran?
No, I see the opposite. I see
Interesting. Okay.
unbelievably cheap oil prices coming.
Love it.
I see
Yeah.
unbelievably expansive energy resources coming online. All of that rebuilding money is for nuclear reactors. I think Iran's even going to get a commercial nuclear reactor out of this deal, not enriched uranium, maybe some other fuel source, maybe some third, fourth generation that doesn't even need uranium that can't be turned into a bomb. So
Hmm.
I see the opposite. I see us entering a energy golden age and having cheap gas, Venezuelan sources coming online, Guyanese sources coming online, more out of Canada, more out of the United States, and more out of Iran, frankly, and that part of the world. So it's really just where the venue of pricing can be
Hmm.
controlled. That's the issue. Now, Iran having sovereignty over its territorial waters, I think, has always been part of the deal. I think by allowing that oil to flow, America already showed a willingness for this to happen. Now, I even suspect that part of the deal is going to be about America leaving the region altogether. That was one of the contingent. That was one of the points that they had made from Iran before. I think America's getting to the point where that would be really well received by most people in America. It would really be a sign that the perpetual war is over. There's no more risk of perpetual war. You'll see Qatar and UAE and Saudi take a much larger role in their own backyard, which I think would be good for everybody. And then it would be up to them to deal with how the Strait of Hormuz is run and what the tolls are and all that kind of stuff. But I don't think the purpose of this was ever to destroy Iran. It was to change the ability of Iran to be a wild card in energy markets in the world. That was really the risk, is that my worldview is Trump has to keep oil prices low for his reelection bid in November. He's got one more chance. The lack of credibility in public debt markets in the United States is such that we get one more Fed Reserve print before the end of all of this yen carry trade, China buying our debt to keep our currency high and theirs low. All of that stuff is going to evaporate. We get one more kick at the can of the Federal Reserve printing a ton of money and using it to change the world. And Trump has to pump all that money into an epic market that goes right into the autumn. And this Iranian situation, why now, is because it was the sort of threat that could upend. He's got one more print. If he would go and play that card, he's toast. This whole trap could have been sprung on him over the summer. Then he's trying to catch up and he can't do it. By removing it now, he's made it so that oil can flow around the world, even without the Iranian oil. Again, it looks like we've got enough supply coming on from Russia, enough supply coming on from, even potentially, I mean, that's one of the great ideas that you could apply to this is, yeah, sure, take the whole strait. And in 5 years, there's a new pipeline and no one is even using the strait anymore because they realize it is such a weakness. But Trump has spent his early part of his presidency locking down all of these choke points around the world. That's the point of the Panama Canal from the very beginning. Remember, it was get China out of the Panama Canal.
Right.
The point of Greenland was the same. The point of the Suez Canal was the same. Trump is getting control of all the choke points in order that no one can screw with him in America from about July 4th and the 250th anniversary of the United States, and about the time he's got to do this big one last Fed print and run it hot into a whole new financial system.
Yeah, well, I hope you're right, because between the Fed print and that UFC fight at the White House, Trump has really got to get things in gear
and the
for
Indy race.
Those midterms this year. And the Indy race, of course. Can't forget that one. All right, well, we're going to actually take a quick break here, Nolan, because when we're back, we're going to be joined by Fernando Nikolic of BTC Perception, and we're going to be helping us make sense of all the madness. So everybody at home, stay tuned. Nolan and I will be right back with Fernando after this quick break. Welcome back to RoxomTV News. If you want a clean signal that the financial world is quietly rewriting its own playbook, well, this is it. In the middle of a geopolitical conflict, money isn't running to gold. In fact, it's running to Bitcoin. Right now, this is unfolding across global markets with activity spanning from Washington to Tehran, but more importantly, showing up in real time on trading desks in Asia, Europe, and the United States, where Bitcoin is suddenly acting less like a speculative asset and more like a macro barometer with a bit of a caffeine addiction. Now, let's start with what's actually happening here. You see, Bitcoin has now outperformed both gold and the S&P 5 since the start of the US-Iran conflict. And that's not a small detail you can bury in the footnotes. In fact, I'd call it a headline. According to Bloomberg's senior ETF analyst, the roles have been reversed, with gold ETFs seeing outflows while Bitcoin ETFs are pulling in fresh demand, which is a polite way of saying institutions are quietly changing their minds about what counts as a safe haven asset. Take a look.
This is interesting. Both of the big gold ETFs seeing outflows. A lot of people were kind of dumping on Bitcoin for not being the safe haven store of value about 2 or 3 months ago, and gold was. Well, the roles have been reversed. I think you shouldn't really judge these assets over a couple weeks or months anyway. So I think both are store of values. One's just a little more sturdy, one's a little younger, but they work in different ways. They're more like zero correlated, not inverse.
And then things got, well, even more interesting. Bitcoin pushed back above $71,000 today during Asian trading after reports surfaced that the Trump administration sent Iran a 15-point proposal aimed at ending the conflict. and markets didn't wait around to debate it. Bitcoin jumped roughly 4%, ripping from $68,000 to over $71,300, and wiping out the prior day's losses almost instantly. At the exact same time, oil dropped sharply, with WTI falling nearly 6% to around $87 and Brent sliding toward 98 as traders started pricing in the possibility that the Strait of Hormuz might not turn into a choke point after all. Now, here's where the cause and effect starts to really matter. Lower oil means lower inflation pressure, at least in the short term. And when inflation expectations cool, risk assets tend to breathe a little bit easier. But that's where but what's new here is how fast Bitcoin reacts compared to everything else. It's not waiting for a Fed meeting. It's not waiting for confirmation. It's trading the headline in real time, which is why more analysts are starting to describe it as a live macro sentiment gauge rather than just another asset on the risk curve. And that brings us to the bigger shift happening underneath all of this. You see, historically, when geopolitical tensions spike, money flows into gold because it's stable, it's tangible, and it's been the default safety blanket for centuries now. But in a world that trades 24/7 and settles digitally, institutions are starting to prioritize speed, portability, and global access over tradition. Bitcoin doesn't need vaults, it doesn't need shipping, and it doesn't close at 4 p.m., which suddenly matters a lot when the world feels like it's moving minute by minute. And from a technical standpoint, Bitcoin is now pressing up against a key level around $72,000. And if it breaks through cleanly, analysts are eyeing a potential move toward $92,000. While on the downside, there's solid support sitting near the $65,000 arena, where buyers have historically stepped in. But none of this is happening in a vacuum. The macro backdrop is still fragile. Iran has denied that negotiations are underway. And as long as headlines are driving the narrative, Bitcoin is likely going to keep reacting like a hyperactive lie detector for global risk. And here's the part that actually matters beyond the charts. In previous cycles, war meant gold rallies. That was the reflex. Now, capital is rotating into Bitcoin during the same kind of uncertainty. And that's not just a trade, it's a signal about where trust is starting to shift when things get uncomfortable. Ooh. But because when money chooses speed over tradition in the middle of a geopolitical scare, it's not just chasing returns, it's voting on what it believes will still work when everything else starts to wobble. All right, joining me to talk about this story and others, of course, we're welcoming back Nolan, and we're also welcoming to this show the founder of BTC Perception and friend of the program, Fernando Nikolic, everybody. Fernando, great to see you. How are you? It's been a minute.
Doing fine, doing fine. Exciting times to be alive. We got a lot to discuss.
It really is. So let's jump right into this, gentlemen. You know, we've always been told that in times of war or uncertainty, money runs to gold. That's kind of been the default for decades here. So, Fernando, this is for you. When you see Bitcoin now outperforming gold during a geopolitical conflict, what is that signaling to you right now?
Well, I think we can all agree that the world needs education about Bitcoin. And I think a lot of people think that education means, okay, we got to print more books, we got to do more podcasts, we got to talk about it more. But I think this specific situation is pure education. I think we are seeing that the market is learning how this paradigm shift is actually looking like when it is coupled with a real global conflict. Because like you said in the intro, you know, historically gold is always supposed to win during war, but now it's not, right? And, you know, it spiked perhaps when the Hormuz closure was being learned, like it always does. But then other things happened. Treasury yields went up. The dollar strengthened. So gold reversed. So I think, you know, the hedge thesis that gold has enjoyed for a while assumes that the dollar weakens during conflict. But this time the dollar actually got stronger because every oil importer on Earth was essentially scrambling for dollars to buy expensive energy. So gold's own playbook just broke in a million pieces. And meanwhile, Bitcoin sat at around, you know, 70K with negative funding rates, like, you know, the most bearish positioning in months, and the price didn't really move. So I think that's institutions just buying OTC while retail is panicking. And, you know, gold's playbook is assuming a 1970s world, but, you know, the dollar was supposed to weaken during conflict and it didn't, and Bitcoin doesn't need a playbook at all. It's just kept working. I think the world is learning all the time about that. And I think that's the real education that the world needs.
Yeah, I mean, I think I agree with you. And Nolan, where do you land on this? Do you think this might be an inflection point we're seeing happen in real time, or is this maybe just a coincidence?
Well,
What are you making of this news?
exactly like Fernando said, it's about education, and I'm glad you said not about textbooks, because if humans were really logical and facts mattered and stuff like that, we'd already be on a Bitcoin standard. If it was like, hey, look at this fiat Ponzi, there's a better thing, it would have all switched over. What actually teaches people is things like contrast. Contrast, seeing two things next to each other, and being able to see the black and white of contrast is how people learn. And in this
Hmm.
case, Bitcoin had a beautiful contrast against gold, in particular in the physical manner in which we deal with them, not the markets. What we saw in Dubai, I go there all the time. In Dubai, they got all these gold souks, because there's no tax. So I'll go there and buy a little jewelry and stuff like that for my kids when I'm there. These things are everywhere. That part of the world loves gold, all kinds of people buying it. But when the conflict first started, you saw all of these people fleeing Dubai. They were trying to sell gold in order to get skedaddled and buy these expensive tickets that were there. And it turned out that the gold price, the redemption of gold. So when you go to these souks, the price of gold is everywhere. You see it in every one of them. They're right at the market rate. You're getting the market rate, no tax market rate. It's very attractive. Unloading your gold, you took a massive haircut. People were dumping for 20% less just to buy their plane tickets to get out of Dubai. All kinds of people from India were pulling their bracelets off, selling them, buying plane tickets. Now, the contrast is what's interesting. Go to Iran, where the real conflict was, not what was going on. Dubai didn't have it great. I appreciate, and my heart goes out to the people that lived through the stress in Dubai the past couple of weeks, but it was nowhere near as bad as the people in Tehran. Bitcoin
Hmm.
was trading at a premium in Tehran, where the conflict was hotter. You were getting worse than market rates. You had to pay more to get the Bitcoin in Tehran because it was so useful, versus the
Hmm.
gold, which was trading at a discount physically. So, looking at actual people in war settings, in conflict zones, and seeing the contrast of gold trading at a discount and Bitcoin trading at a premium in the P2P market, not the fake paper ETF, OTC. What do they think about it in Wall Street? Those guys speculating and
Hmm.
betting. I mean, the real people saying, shit, I got family to take care of. I got to get out of here. I'm in Iran. Give me the Bitcoin. Let's go. I'll pay more. Here, take my crappy whatever the money is in Iran.
Hmm.
So contrast is what teaches people. Contrast is a better form and vector for education and for learning than a textbook or some phone book type persuasion, which is just facts. Nobody cares.
Hmm.
Contrast works.
Yeah, I always really love those ads I've seen where it's like how much a house cost in Bitcoin over the years. Like that's the kind of contrast people need to be seeing,
Yeah.
especially when housing prices are becoming more and more unaffordable with, every passing year. And then continuing on this idea of the contrast you mentioned, Nolan, when we see institutions, guys, that are starting to rotate out of gold ETFs and into Bitcoin ETFs in real time, I don't think that's retail we're seeing. That looks more like big money making some decisions here. So, Fernando, what do you think is changing in how these bigger players are viewing Bitcoin's role in the financial ecosystem right now as we're seeing people roll out of the gold ETFs and into Bitcoin?
Well, I also want to like piggyback on what Nolan was saying because I have a
Please.
personal story to share.
Oh, yeah.
My wife is Persian Canadian, right? And her family, her parents, and the rest of the family are in Tehran right now. So when the strikes started, nobody was watching charts. We were all like on WhatsApp, on Telegram, and the first thing that people do in a country under attack is try to move money, value somewhere the government can't freeze it. I'm from Argentina, so Argentines understand this. Iranians
Hmm.
understand this, and I think to your question, I think the rest of the world is now learning this. The West is learning. Maybe starting with market participants first, but I think this is something that the West is learning in a more broader sense right now.
Yeah, yeah, absolutely. And Nolan, kind of along those same lines, what is this signaling to you right now that we are seeing this contrast of outflows of gold but inflows into Bitcoin? Do you think that's the start of something bigger here? Or I would just love to get your thoughts on what you're making of this, especially during these times of major
Yeah, and
geopolitical tension.
I mean, I think it's setting up, you heard Trump start to hype when he was candidate Trump, the audit of the Federal Reserve, sorry, the Fort Knox gold supplies. I think right there, that whole audit process, it hasn't gone away. People, it sort of gets put on the back burner. I do believe we're going to get to a world where that narrative supply chain starts up again, and you start hearing people hint at auditing the gold reserves. It is one of those revenue neutral ways for the government to rotate into Bitcoin, which, as they said, is going to be their framework. And of course, when you think about Bitcoin's role in the energy market, just as you heard Federico say that everything was about getting US dollars to get oil, inevitably it's going to be about energy and how you price energy and what unit of account is important in order to measure the actual energy market. I think that indeed, as we change financial systems, and that's what all of this is really about, it's not just a little bit of oil here and there. We're seeing a complete and total 1945 style change of global pricing, market mechanisms. They will move into a auditability of gold, and then you get into that whole contrast again. Gold has all of these trusted players that you require. That's why there was a discount during the fleeing from Dubai. It's not because people necessarily lost confidence in gold. The purity, the testing, there's risk involved. You've got to factor in the risk. I don't have a gold lab here. I don't have whatever things they do to test the purity of gold. I don't even know what it takes. I've seen it done online. It's not that simple. So that's why the discount was there. So you're going to see Bitcoin and gold continue to have this contrasting relationship if the narrative supply chain starts up again around auditing Fort Knox and the American gold assets. Right away, you're going to understand about paper manipulation, the futures market, how much is tomfoolery and mischief goes on in these overly engineered, financialized environments. So in many ways, the story of gold versus Bitcoin is just starting. And that's why all of this cycle and rotation is so relevant now. It's not just theoretical anymore. It's not just from Bitcoiners having to make the argument to say, try and move all that gold out. Now we're actually seeing people do it. We're actually seeing the purity testers fail. We're actually seeing the ability to secure gold fail. And if the gold isn't there in Fort Knox, that's good for Bitcoin and good for the US balance sheet in some ways. If it is still there, then there's massive amounts of benefits as well, of course, to the US balance sheet itself. So heads we win, tails they lose.
Yeah, and the reevaluation of gold one is really interesting because isn't it right now the gold in Fort Knox valued at something, it's like $42. It's like something so low compared to what the price is at now. So that would seemingly free up a lot of money for us to buy Bitcoin. And kind of expanding on that, Fernando, if we're actually seeing these early stages of a shift from gold to Bitcoin as a store of value during times of uncertainty, what do you think would need to happen next for that to really stick and not just be a temporary narrative? What do you think would happen next?
Well, first of all, we don't even know if there's any gold in Fort Knox, so starting to even price that is that's a weird challenge to begin with. Well, I think one thing that is important that I think everybody needs to understand, that I really hope more people will learn soon, is that today Trump announced or gave some hints about the war potentially ending or like a negotiation or a new deal being structured. And you might think that, Bitcoin's performance today is a reflection of that. But if you really take a look, Bitcoin was already outperforming before Trump said anything at all. And here's the thing, Bitcoin trades 24/7. So not only do the rest of the world need a solid foundation to price any asset in, which is Bitcoin, but it needs to price anything in the environment that we are living in right now, which is a 24/7, always on information loop. So we need something that prices in the information while the New York Stock Exchange is closed, for example. I think a lot of people will start to see the value of that, both what Nolan was saying about Bitcoin being the measuring stick that all assets will eventually be measured against, but also the fact that it is 24/7 and the prices in information. And essentially the end of the information asymmetry that a lot of institutions have benefited from for many, many decades is essentially coming to an end. And that is not only a repricing of things, but essentially it's a remodeling in in the way that we think about things. So it's a huge shift, and it's still early, and but more and more market participants in the rest of the world is definitely catching on with situations like this.
Yeah, and one final question, guys, kind of piggybacking off that. I know we've been hearing about the New York Stock Exchange might actually be going on 24/7. So Nolan, I'd be curious, like, as Bitcoin has kind of been that canary in the weekend coal mine for the financial ecosystem, if we see the New York Stock Exchange become 24/7 trading, how do you think that affects Bitcoin going forward, especially as that kind of indicator on the weekends when trading typically wasn't happening?
Well, so that's more related to U.S. equities. Now, U.S. equities is
Okay.
its own particular environment. I would never short American companies or America or any of those things. But more in line with a structural change, which is really what I think we're trying to address here. And the New York Stock Exchange wouldn't necessarily be a structural change. It's more the same. It's U.S. equities. What I think would really hasten this flippening of systems, again, go back, that gold in Fort Knox, that's Treasury gold. That's not the Federal Reserve's balance sheet. That's the U.S. government's balance sheet. If it's not there, if anything like that happens, right, and you're dealing with the Treasury's own balance sheet and you're thinking about it in those terms, just look at what's going on today with the Clarity Act and the rumors that they're not going to be able to charge interest on or offer interest on deposits to U.S. citizens, but they're still going to be buying a T-bill in order to mint the stable coins. So what you end up seeing here is really just the credibility of U.S. public finance, which is why I believe they have one more Fed print in them before we have to fully move to another system, because U.S. public debt is just simply not credible. And they're going to have to put a lot of work into making it credible again. U.S. equities are a part of that, but really something like a bit bond is going to be more important, and a bimetallic system. One money for consuming, which doesn't really have credibility, one money for saving. You're Argentine. You've lived most of your life in a bimetallic system. You've had the peso for spending. Pesos are good for coffee in Argentina. They're good for Coca-Cola in Argentina. But ask an Argentine how much their house costs in pesos. They will not have any capacity to answer you. They won't understand even what you're talking about. They'll have to tell you how much their house is worth in dollars. You ask someone how much a car costs in Argentina, it's dollars they're going to quote you. Only sandwiches and consumer SNAP, basically food stamps, are what they use the peso for. It's a type of food stamp, for lack of a better a way of explaining it. So what we're seeing that's structurally more important than 24-hour trading is the credibility of public finance. And that's where the news really will come into play, because the psyops and everything that we're seeing in this 24-hour news cycle is all about government credibility. How credible are their balance sheets? The stock exchange exists separate from that. It's one of those things in America that's just, it works. The whole world needs it. It's a credible public market. But public finances was not credible. And that's what really needs this injection of credibility. And to go back to the Clarity Act and why that's so important here, it's very simple. If they do not put interest on the deposits, for Americans, they're going to offer it abroad. They're going to subsidize the dollarization of the continent. They're going to subsidize the dollarization of Argentina. Argentina is going to get interest for its USDT deposits, not Americans. And that's going to dollarize Venezuela. It's going to dollarize Argentina. It's going to dollarize Canada. And then they'll all be like El Salvador is now, a Bitcoin country that is on bimetallism. It has the Bitcoin going and the US dollar going. That's what's in store for most of this continent. And that's the bigger story when it comes to the actual recalibration of the system and the rotation of gold into the markets. The stock exchange can't do all of that. The stock exchange is just for rich people trying to make money off of speculation, which is great. Good for them.
Yeah. Well, I appreciate that thorough breakdown, though. And it seems like we made our way to South America. So I want to continue there with our next story, guys. So hang 10, I'll bring you both back in just a second, because Brazil is signaling that the global scramble for resources is about to get a lot more political. President Luiz Inácio Lula da Silva made it clear he will not allow foreign powers to take control of Brazil's rare earth and critical mineral reserves, a statement widely read as a direct warning to Washington. Brazil holds some of the world's largest deposits of lithium and rare earth elements, the same materials that power EV batteries, advanced weapons systems, and the semiconductors running basically everything. Now, this comes as the U.S. ramps up pressure on resource-rich countries to open access to these minerals, part of a broader push to reduce reliance on China's dominance in the space. Now, Lula has been increasingly vocal about what he sees as a modern version of resource extraction, warning that global powers are once again trying to control developing nations through their natural assets. And when you look at the recent U.S. moves involving Greenland, Venezuela's oil sector, and even pressure around strategic infrastructure like the Panama Canal, Brazil is clearly reading the trend and drawing a line early. Because this isn't really about mining, it's about who controls the supply chain for the next generation of technology. And Brazil is making it clear that if you want in, it's going to be on their terms, not yours. All right, I'm bringing the guys back. Gentlemen, so Lula comes out and basically draws a line in the sand saying Brazil's not letting foreign powers get their hands on these resources, and it feels like this is about more than just mining. Fernando, what do you think is really driving that moment right now, especially as someone from South America? I'd love to get your read on this situation.
Well, first of all, I think we need to look at what kind of politician Lula is. He's an extreme leftist demagogue. So, it is in his vocabulary to speak like this. He has already said, oh, all the gold has been co-opted, all our silver has been co-opted, all the diamonds have been co-opted, and now we will not allow them, this foreign, colonialists, to take the critical minerals that we have. The thing is, though, even though, like you said, Brazil is, I think, the second largest rare earth reserves on Earth, right? Just 20 plus million tons, I think, when I Googled it. And the problem is, or the situation is, that China controls 60% of the mining, and I think above 90% of the refining. So Brazil don't have that. They have the minerals, but they don't have the infrastructure to actually refine them. Now, the U.S. Has put in 500 plus million into Brazilian mineral projects and identified a lot of targets. And that's actually what made Lula snap, because if you take a look at these deals, the U.S. has signed a minerals deal directly with the governor of Goiás, who is a direct political rival of Lula. So it's actually a pretty petty political move that Lula is doing, which he's known for being very petty. If you take a look at his history with Bolsonaro and the kind of the narrative warfare they've had between the right and the left. So, but the thing is that the U.S. went around the federal government on purpose. And several officials have called it, the U.S. attempting to bypass Brasilia, and they're right. That's exactly what it was. So Lula declined because he's very U.S. hostile. He declined to join a U.S.-backed critical minerals alliance with a bunch of countries, and he signed a mineral deal with India instead. So he's playing the field because he can, but it's kind of like the only thing that he can do.
And I'll add one detail to that too, which is that Europe was trying to get that deal, and Trump went in just before to that province. So that could be what's going on as well, is that he's being pressured by other colonial powers to use the colonial argument to say, don't colonize us, which is
exactly. Now, Lula he's smart enough to see that coming, right? But complication, I think, from the outside looking in, obviously, is that Brazil has one operating rare earth mine and basically zero refining capacity. So having rocks in the ground and having an industry are two different things. And China has been spending decades building processing infrastructure in Latin America and Africa, and Brazil hasn't even started. So Lula's position is real, but it's partially a bluff. I think he needs outside investment. He just doesn't want the deal that Argentina always got, where you sell the raw material cheap and then you buy the finished product expensive.
And I want to look at the context of which this is all happening in, guys, because when you zoom out and you look at this move, plus everything we've seen recently, specifically with Greenland, Venezuela, and even pressure around the Panama Canal, Nolan, do you think this is starting to look like a broader shift where countries are getting a little more protective of what they currently have, especially with the United States kind of peering over everybody's fence and checking things out? Like, what is your beat?
No, I'd say they're welcoming it more than ever, because go and look at Trump's tour around China before he met with Xi last autumn. He went first to Australia, and then he just basically circled China with all of its trade partners. And he did something very amazing at that time. He went to Australia and signed a deal on rare earths with Australia. And it wasn't just for the extraction. So that would be the old British model of colonialism. The British model of colonialism was exactly what you're suggesting here, Hank, which is take the raw stuff, give them pennies on the dollar, get some mining jobs, and then make all the refined high-end products out of your own colonial fountainhead, and use that to really have the value added part of the economy. When Trump went and did this move to have leverage to go negotiate with Xi in Australia, he did an amazing thing that we have never seen before, which is he injected a bunch of American money into the high-end refinement angle, because it's really the magnets and the things they build out of the rare earths that are valuable, the batteries and all that. The rare earths themselves, first of all, not rare, just ugly to mine, very easy to find in the world, just so ugly to deal with that no one wants to deal with it. So the deal they gave Australia and the deal they're giving everyone is the value added angle. They're actually investing in the local countries so that they actually build the magnets and the high end stuff. So the deal that they did with Brazil is that it's not just give me your raw materials and let's do the old fashioned colonialism. It's more like the American colonial model, which was the one that America fought the revolution with Britain over, which was, no, we're going to do everything here. We're going to build and we're going to make money. We're not sending it back to you bloodsuckers. We're going to be rich. And that was a big shock about the US Revolutionary War. The Hessians, they were the soldiers the English had to pay to come and fight. They were German soldiers for hire. They abandoned the effort when they got to Long Island because they said, how can these people be so rich? Like, how can they possibly be the enemy? They're making money off of their colonial attitudes, and they're doing it themselves. They're building America. And that's what people have to get ready for. That's what Greenland is really about. Greenland is about to be colonized America style. That's the people who go there get to keep what they make and build high-end stuff. That's what's going to happen in Brazil. So people aren't worried about America peering over the shoulder, as far as I can see, unless they're being prompt engineered by England and all these other people like Lula is. What's happening is the countries want to build the magnets. They want to make this money. These are great jobs. These aren't just dig me a hole and I'll pay you pennies on the dollar. This is sell me a crazy magnet that I need, and you can make all the high-end money off of it.
Well, if they're about to get America styled here, I hope they're ready for more McDonald's and Starbucks, because that tends to be what happens. And Fernando, I got one more on this one before we move on here. If physical resources like this start getting locked down country by country, do you feel like that in any way could increase the appeal of something like Bitcoin, where the asset itself isn't tied to geography or controlled by supply chains?
Well, I think we're still so early that I think what these deals is going to be priced in has more to do with your geopolitical alliances and what currency they prefer versus something that is neutral. So I think we're going to be seeing a lot of, plenty of more decades, to be honest, where, Brazil does a partnership with a BRICS country, and they might be doing it on a yuan standard, for example, because of China's directions, or the US dollar because it's with the US. So I don't know. I don't think so. And knowing Latin American politicians as well, historically, I mean, they have an incredibly short-sighted view on anything. That is actually the reason why there isn't any infrastructure in these countries to begin with, making the entire resource for not really about who has the minerals. It's about, who has the infrastructure to refining them. So, in this case, Brazil has the rocks, China has the factories. So China is going to be the one telling Brazil in what currency to commerce. But the US has the checkbook. And I think Lula's play right now is betting that he can play all three against each other. And let's see how that goes.
Yeah, we'll see, guys. I don't know, but we'll find out soon enough. And you mentioned short-sighted. Well, I want to talk about somebody that's not short-sighted in South America as we move our way into our next story here, gentlemen. And that, of course, is Roxom, the Bitcoin native trading platform and the parent company of RoxomTV. Just did something that quietly messes with one of the oldest rules in global finance. They've launched the first ever oil versus Bitcoin perpetual futures contract, which means you can now trade crude oil priced directly in Bitcoin. No dollars, no middle step, no pretending the dollar has to be involved at all. And yeah, they dropped a promo for it. Let's take a look.
1973. But there's one great problem: sharp increases in the price of gasoline. 1990, go for 2022.
Russian oil will no longer be acceptable at U.S. ports.
Today,
Don't use the Strait.
oil has responded to geopolitical shocks with volatility.
When this is over, oil prices are going to go down very, very rapidly.
And for the first time, you can trade that volatility in Bitcoin, oil BTC, only on Roxom.
Well, I don't know about you guys. I'm ready to punch a hole through a wall after that one. Now, here's actually why this matters. You see, for decades, oil has been the dollar's home turf. You want to trade energy, you go through USD. That's kind of been the deal, baked into everything from geopolitics to global trade flows. Roxom just stepped in and said, what if we just don't do that anymore? Instead of thinking in dollars, you're now trading the relationship between oil and Bitcoin directly. So if you think oil is going to outperform Bitcoin or Bitcoin is going to rip while oil lags, you don't need to open multiple positions and juggle currency exposure. It's just one clean trade. And that might sound like a niche product, but guess what? It's not. It's a different way of thinking about markets entirely, where the dollar isn't the default measuring stick for everything. Because once you can price oil in Bitcoin, you can start pricing anything in Bitcoin. I'm bringing the guys back. Gentlemen, we got Roxom launched this product where you can trade oil directly against Bitcoin without touching the dollar. And on the surface, it sounds a little niche, but when you step back, how big of a deal is it to remove the dollar from something as foundational as oil trading? Nolan, let's start with you. I'd love to get your read.
I mean, this is the whole game right here. If we're right about this bimetallism thing happening, if we're right about regional influence being a reality, America basically saying the Chinese system is a valid system for them and they can promote it as they see fit around their part of the world. If we really are working towards this multipolar world with an American Dunroe doctrine and US dollars as a type of food stamp, then the only way for the world to go forward and have some kind of reconciliation is for energy to be priced in a non-political currency, not in food stamps. It has to be, and price discovery has to happen in a unit that everyone can agree with. When we talk about the separation of money and state, this is it. This is the wedge that actually brings on a Bitcoin standard, because the only economies, the only parts of the economy that really matter, COVID showed it to us. The only parts of the economy that really matter, unfortunately, are Wall Street and the oil markets. Everything else didn't. They shut it down. We barely noticed. Restaurants, consumption, all of that is a blip compared to what's actually happening in the world, which is the energy companies. They're the ones who run the world. They're the most powerful companies on earth. And they still have to have global trade. The world won't work unless they are completely globalized. We can have this deglobalization for consumption, but when it comes to energy, there has to be a global price for everything to work. It makes sense if everyone is going to agree on the price of energy that is an apolitical currency. This is bimetallism and the wedge to separate money and state being driven right into the heart of the fiat monster. It looks like it could kill it.
Yeah, I mean, you know, for decades now, we've seen oil basically be synonymous with what Nolan always lovingly refers to as the US trash token. And that's kind of been the backbone of global trade, right? So, Fernando, when you see something like this, does it feel like experimentation to you, or is it maybe the early stages of something that could actually disrupt the entire system? What are your initial thoughts?
Well, I got to commend you on the timing on this. I don't know how long you have been working on this product, but it's
the timing is choice.
Yeah. I mean, you allude to that in the intro as well. Like, there's a historical significance of all of this, but the fact that you released this while all of this is happening on the Strait of Hormuz, still being closed, and Dubai crude was like above 150 is a pretty insane timing. But like Nolan was saying, you know, for 50 years. Oil has been priced in dollars, and it's not like the dollar is better at pricing oil. It's because the U.S. military guaranteed the shipping lanes, and Saudi Arabia essentially agreed to the deal. What's interesting to see is that when the Hormuz was closed, oil kind of like fractured into two different markets. And I read that there was an Indian tanker that paid in yuan for safe passage through IRGC checkpoints or IRGC waters. So just that little like touch point is the petrodollar cracking in real time, essentially. So I think what you guys are doing is you're seeing all of this and you're kind of like building the infrastructure for what comes after cracks like this, which I don't think is going to be a one-time occurrence. We're going to see a lot of examples of different markets for the same asset, black market or not, and they're going to be priced differently. And I think as more of these cracks happens, people just want something stable, one thing to price it in. Like Nolan says, it's a neutral currency, and I think Bitcoin is definitely a good fit there.
And I'll even add that you can see that America is embracing this new reality of the monopoly of the US dollar markets for oil going away, because when Takeshi, the Japanese prime minister, was visiting Trump last week, it was a big love-in. Everyone loved each other, have a great time. That was an amazing press conference. But just before she arrived, she announced out of Japan that they were buying Russian oil from Shanghai using yuan. And Trump didn't seem to bother him one bit. She came and they partied like we expected them to. America doesn't it's admitted that it can't keep playing this game. There's another game it's got to play. But the idea of killing Gaddafi and Saddam Hussein because they want to sell oil for a currency other than the US dollar is no longer going to be the prompt that engages the US military around the world anymore.
And we're kind of running low on our time here, guys, but I want to wrap up with one more question for Fernando. Because Fernando, we've seen people deep in the Bitcoin space like yourself, this idea of pricing global commodities in BTC has been talked about for a while. So when you're actually seeing it starting to happen, even in small ways, does this feel like a validation at all, or are we still very early in that transition where we can't call it that just yet?
I mean, every major financial system started as a niche product anyway, right? Like the first stock exchange had a handful of participants and was a few crazy cypherpunks. That was the entire Bitcoin ecosystem, towards the end of the aughts. So you don't really judge, infrastructure by its initial, by its first week of volume or whatever. You judge it instead by whether it solves a real problem. And I think a lot of more people are going to be asking the question, how do I trade insert asset here without the dollar? And, in this case, how do I trade oil without the dollar? Got a lot more real when stuff like the Hormuz Straits closing. So it might feel like a niche product right now, but it's still early in the game. But I think it's just this product is a good reflection of more things that will come. We already see tokenized stocks, tokenized equities, so that non-US participants can actually invest into them. So this is just the beginning. I think we're gonna re-rig the financial system using not only Bitcoin technology but also the Bitcoin philosophy and how we build products.
Yeah, and Fernando, I know you are very much part of that system and rebuilding kind of the future of finance and specifically information, as I know you have your amazing platform, Perception, that really democratizes information for people out there so they can kind of get the intel they need to make informed decisions. And I know it's a great platform. I've checked it out. For those in our audience that haven't had the opportunity yet, can you just give us a quick breakdown on where they can go to learn more about Perception and, of course, where they can get more of your takes? Because we certainly appreciate having you and having those takes on the show, so I know they'd love to get them outside in the Twitterverse as well. So tell them where to go.
Yeah, I appreciate that. Well, institutions survived for decades because of information asymmetry. They held back information and they leveraged that in order to exist and build a business and create power. And they controlled the flow of information through very specific channels. And right now, the world that we are living in now is of a media landscape which is incredibly fragmented, and more people are just free flowing the information everywhere. So it's going to be increasingly harder for anyone to just keep up with an industry sector. So that's the reason why I build Perception. It gives you everything that is trending, what people are talking about, how they are talking about, from tweets to earnings calls to keynote speeches, panels, podcasts, research papers, whatever. You name it. I got over 1,000 sources in the platform, churning out trend clustering and giving you a sentiment analysis of everything that matters. So you get a full 360-degree view that doesn't have any algorithms showing you a very, very tiny space of the entire ecosystem. So if you want to check that out, just Google Bitcoin Perception, BTC Perception. or go to perception.to and see it for yourself. It also connects with AI tools like ChatGPT and Claude and Gemini, so you can query everything that you want about the digital assets infrastructure system inside of these tools as well. So yeah, that's where you can find it.
That's amazing, Fernando, and we appreciate you joining us this morning. Share your insights and expertise, and you're doing God's work out there, democratizing info for all of us little fish out there so we can compete with the big boys. So we thank you for that, and certainly for joining us this morning. So thank you so much for your time. It's always a treat when we get to have you on the show.
Yeah, thank you for having me. Thank you.
Thank you. And that, of course, brings us to Nolan. So if you're not on BTC Perception and you hadn't checked that out, you can just check out Nolan. He is the human connector of the dots out there. Nolan, we always appreciate your time, insights, and expertise on the show. And I can't wait to have you back tomorrow to wrap up our time together. It's always a treat having you on.
Quite a historic week. 2006, 2026 looking like 1945 out there. So it's a treat to talk about the news every day.
Yeah, it's been an exciting news cycle so far. I think we could all agree maybe a little bit more peace on certain ends would be okay, but it certainly makes for some good conversational fodder, and you guys always make for it as well. So thank you, gentlemen. It's always a treat having you both on the show, and I hope you enjoy the rest of your weeks.
Appreciate you guys. Thank you.
See you guys. No, and I'll see you tomorrow. Cheers. All right, we're taking a break here at RoxomTV News, guys. But when we're back, we're going to be diving into our second hour of programming, where we're going to be joined by the one and only independent journalist extraordinaire, Frank Corva. He's one of my best friends of the program, and I can't wait to have him on to break down all of the madness. So stay tuned, RoxomTV News, and Frank will be coming back right after this. Welcome back to RoxomTV News. We're following this morning's breaking news, so let's go back over it. As Iran has rejected the U.S. proposal to end the war and issued 5 conditions of its own. According to Press TV, Tehran demands, number 1, a complete halt to all strikes and assassinations. 2, concrete mechanisms guaranteeing the war won't be reimposed. 3, payment of war damages and reparations. 4, the conclusion of the war across all fronts, including for all resistance groups in the region. And 5, international recognition of Iran's sovereign authority over the Strait of Hormuz. Now, Iran also rejected the concept of a ceasefire entirely, and in keeping with the strongman posturing that has defined this war on both sides, Tehran said it would end the conflict at a time of its own choosing, not Trump's. Those aren't negotiating positions. They're terms a winning side dictates. Meanwhile, Trump is telling the press the war is over. Take a look.
You know, I don't like to say this. We've won this. This war has been won. The only one that likes to keep it going is the fake news. I mean, the New York Times, you read the New York Times, it's like we're not winning a war where they have no Navy and they have no Air Force and they have no nothing. And we literally have planes flying over Tehran and other parts of their country. They can't do a thing about it.
Now, this comes as President Trump's approval rating has hit 36%, the lowest of his second term. 46% of Americans agree that the war will make the country less safe in the long run, and 61% disapprove of the strikes. Yesterday, the Pentagon ordered 2,000 to 3,000 paratroopers to deploy to the Middle East, drawn from the immediate response force that can mobilize anywhere in the world within 18 hours. Combined with 2 Marine units already moving toward the Persian Gulf, that's 6,000 to 8,000 U.S. ground troops arriving in close proximity to Iran, on top of the 50,000 American troops already in the region. But military dominance hasn't produced a political outcome. Hormuz is still very much closed. Iran still has its enriched uranium stockpile, and the regime hasn't collapsed despite the killing of Khamenei and dozens of senior military figures. Iran can't match American firepower, so it's fighting a different war, imposing economic costs through Hormuz, hitting energy infrastructure across the Gulf, and waiting for American domestic politics and gas prices to force an exit. They're playing a contest of who can take the most pain the longest. And the question now is whether Trump can find an off-ramp that lets him claim victory before the midterms, while Iran claims it survived, and whether anyone believes either version. All right, joining me this morning to talk about this story and others, he's one of our good friends of the program. We're talking, of course, about independent journalist Frank Corva, everybody. Frank, happy Wednesday. Always great to have you on the show.
It's good to be here with you, Hank. Happy Wednesday to you as well.
Oh, yeah. So let's get right into it, Frank. I want to start with the obvious tension we're seeing. You got peace talks being floated publicly while missiles are still very much flying in the air. When you see that happening at the same time, how seriously do you think anyone should be taking the idea that a deal is actually close at this moment? What are your thoughts?
I don't know how seriously anyone should be taking it. I'm not taking that seriously. I'm not. I
Yeah.
don't think we're anywhere near that. There were two things I wanted to highlight. You talked a little bit about how Iran cannot necessarily compete with American firepower, and I do believe that that's true, but I think that they're playing a different game. So this week, we actually saw a tweet from the Speaker of Iran's parliament. That's Mohammad Bagher Ghalibaf. I apologize if I pronounced that incorrectly. His tweet read, alongside military bases, those financial entities that finance the U.S. military budget are legitimate targets. U.S. Treasury bonds are soaked in Iranians' blood. Purchase them and you purchase a strike on your headquarters and assets. Not good. Not good.
No,
We don't like
not good.
Yeah, and we've also seen. So I think this started about 4 weeks ago now. If we go back to the rate on the U.S. 10-year Treasury, it was about 3.96% 4 weeks ago. It's now spiked as high as 4.4%. So we have U.S. Treasuries trading like S-coins. I won't say the word here, and we have members of, or the speaker in the parliament in Iran, essentially playing financial warfare, or saying, look, if you're using this instrument that the U.S. uses to finance its debt, to finance wars, its treasuries, then we're looking at you. And that was a direct threat. So I think that they're playing this game knowing that Bessent is in a very tight position. That's our Secretary of the Treasury. And I don't think that they have a ton of wiggle room, especially, as you said, with midterms not too far away.
Yeah, well, first of all, I really hope you got that name pronunciation right. I would hate to see a bounty placed on you. And we also, what's interesting about the situation is, like, they seem to be approaching it very differently, because we have Iran is openly mocking the U.S. on state TV. I don't know if you saw any of those like AI Lego videos they've been putting out. Like, it's outrageous. Like, we're in the midst of this conflict and they're putting out AI Lego videos. And they're basically saying that these negotiations we're hearing Trump about aren't even real. So my question for you, Frank, is what is that telling you about how both sides are approaching this moment right now? Because it, like, the Iranians making these Lego videos and stuff, it almost seems like they're not taking it that seriously. What is your beat on this? I don't know what to make of it.
Yeah, I think they're catching President Trump in his game, or in his antics, which is, this is, I'm sure, what he considers to be 4D chess, or what he would call the art of the deal. I don't think that's what's actually happening. If anybody watches Jack Mahler's show, Jack has like fully gone off the deep end with this stuff. He's not happy.
Really?
Yeah. So on Monday, I think he put out an episode where I was I was trying to do a little indoor cycling as I listened, to try to not let it get to me as much, kind of burn off some of that anxiety. Wasn't really working. I got pretty anxious afterwards. We're not in a great place. I think Iran is calling President Trump's bluff. And I think the bigger thing that is really worrisome, but also that breaks my heart, is that you're watching countries like the Philippines break right now. You're watching places, places that depend on oil from the Strait of Hormuz break. Are those places going to want to be allies with the United States if we have essentially, if we're creating a scenario in which oil is either not getting to them or it's extremely expensive as a result? A lot of these countries have no reserves. So this isn't just a story about the United States, or it is, I guess, by an extension, by proxy of its allies, especially in the Eastern Asia region. So there's a bigger story here playing out, and it's, do we want to be on the Americans' team if this is the sort of stuff they're going to get us into? And I think that that's something we really, really need to be paying attention to.
Yeah, you're so right. As this story continues to expand beyond just the United States and Iran, I mean, Iran is still launching attacks at not just Israel, but also at Gulf nations who are warning they might now enter the war. So, we have Trump out here saying, oh, this war is close to being over. It's basically over, whatever he says. But does this suggest what we're seeing from Trump saying, and then actually in practice, these other nations potentially wanting to join in the conflict? Does that suggest that maybe this is escalating behind the scenes rather than cooling down, despite what we're hearing from the president right now?
It's funny. I don't even think it has to escalate. I just think it has to stay the same. I don't even know that it's escalating. I think Iran is operating from, unfortunately, because I'm not a huge fan of the Iranian regime, I say this, they're operating from a position of power, though. It's unfortunate that they don't even have to really crank this thing up. They can just sort of keep things the way they are. If you've seen the footage of the amount of boats that are just sitting outside the Strait of Hormuz waiting to come in, it's insane. It's totally insane. And I think one of the things that Iran has done is saying, well, we'll let you in, but so long as you pay in Chinese yuan. And we know that one of the reasons the US dollar has strength is because it's the petrodollar. Oil markets are denominated in dollars, and that's one of the reasons for its strength. If that changes, if now Chinese yuan becomes the preferred currency, or even something neutral like gold, we're in a very different world order. The dollar is going to be it's going to be valued very differently if it's not the primary settlement network for commodities like oil.
Yeah, and let me ask you, for people at home especially, like, what would that really mean if the United States had its place, if the US dollar had its place taken by something else? Like, what would really be the ramifications on the everyday American for something like that?
I think they'd be large, those ramifications, and plentiful. I think there'd be a lot of them. The big question is, what would the value of the dollar be at that point? And the big question mark within that question for me is, we still have the Fed to buy US Treasuries to help basically do yield curve control. So I don't know how much of a role the Fed can play in essentially backstopping the Treasury. And so it's like, and this is funny because I think it was about a year ago or maybe 6 to 8 months ago, we were talking about Bessent being both the chairman of the Fed as well as the secretary of the Treasury. And it's like, well, there is no difference. It's just one person selling it to the other person. And so why not just make that the same person? It seems a little bit more efficient.
Great job.
Yeah, well done. You did it. Good job. So I think I don't know what role that'll play. The bigger question also is stable coins. So you have a lot of stablecoin issuers buying US Treasuries. Do stablecoins continue to proliferate, become ubiquitous globally? I don't know. Maybe. But I don't think I'm not a macroeconomist sort of analyst. I follow this stuff, but I can't take that title. But I think that it's an issue. It's an issue, and I don't think that, I don't know that they would move over right away to using another nation's currency, whether that be Chinese yuan or whatever else, Russian rubles. But even if it's gold, something that's just a neutral settlement layer or a neutral asset to settle with, this changes a lot. I mean, money tends to maintain some of its value because of its network effects. If you take some of those network effects away, it's going to lose some of its value. How much of its value will lose, I don't know. There are a bunch of other factors there, but I do think it would be significant.
Yeah, I mean, what we've seen the last couple of months, significance, a very good way to put it. I saw a 7 in front of a per gallon price of gas when I was driving the other day. So it's hitting, given I live in California. It's my own fault there. But yeah, it's very significant. I think we're going to keep feeling it at home. Like you said, this doesn't need to escalate. This just needs to keep going on because they are actually like operating out of a position of strength right now. And I don't love it, but we'll see how it plays out. In the meantime, though, Frank, you and I are going to take a quick break. But when we're back, Frank and I are going to be covering more of this morning's top stories. So stay tuned. More RoxomTV news coming your way after this quick break. Welcome back to RoxomTV News. If you want a clean signal that the financial world is quietly rewriting its own playbook, this is it. In the middle of a geopolitical conflict, money isn't running to gold. In fact, it's running to Bitcoin. Right now, this is unfolding across global markets with activity spanning from Washington to Tehran, but more importantly, showing up in real time on trading desks in Asia, Europe, and the United States, where Bitcoin is suddenly acting less like a speculative asset and more like a macro barometer with a bit of a caffeine addiction. So let's start with what's actually happening here. You see, Bitcoin has now outperformed both gold and the S&P 500 since the start of the US-Iran conflict. And that's not a small detail you bury in the footnotes. In fact, I'd call it a headline. According to Bloomberg senior ETF analyst, the roles have been reversed. Take a look.
This is interesting. Both of the big gold ETFs seeing outflows. A lot of people were kind of dumping on Bitcoin for not being the safe haven store of value about 2 or 3 months ago, and gold was. Well, the roles have been reversed. I think you shouldn't really judge these assets over a couple weeks or months anyway. So I think both are store of values. One's just a little more sturdy, one's a little younger, but they work in different ways. They're more like zero correlated, not inverse.
And then things got even more interesting. Bitcoin pushed back above $71,000 today during Asian trading after reports surfaced that the Trump administration sent Iran a 15-point proposal aimed at ending the conflict, and markets didn't wait around to debate it. Bitcoin jumped roughly 4%, ripping from about 68K to over 71,000 and wiping out the prior day's losses almost immediately. At the exact same time, oil dropped sharply with WTI falling nearly 6% to around $87 and Brent sliding toward $98 as traders started pricing in the possibility that the Strait of Hormuz might not turn into a choke point after all. And that brings us to the bigger shift happening underneath all of this. You see, historically, when geopolitical tensions spike, money flows into gold because it's stable, it's tangible, and it's been the default safety blanket for centuries now. But now, in a world that trades 24/7 and settles digitally, institutions are starting to prioritize speed, portability, and global access over tradition. Bitcoin doesn't need vaults, it doesn't need shipping, and it doesn't close at 4 p.m., which suddenly matters a lot when the world feels like it's moving minute by minute. All right, so joining me to talk about this story, we're going to welcome back Frank, and also joining us, he's one of our good friends over at Zappo Bank, Piotr Bedkowski, joining us to break down this story as well. Piotr, great to have you join Frank and I this morning. How are you?
I'm great. Great to be on the show again. Thanks, Hank.
Oh, pleasure is all ours. We're excited to have you. So let's start with you on this first one, Piotr. We've always been told, right, that in times of geopolitical stress, money runs to gold. That's been the playbook. But now we're seeing Bitcoin outperform gold and equities during an active conflict. So from where you sit at Zappo, is this just a temporary rotation we're seeing here? Or do you think maybe we are watching the definition of safe haven change in real time? I'd love to get your thoughts on this.
We are definitely seeing the change in a sense that, gold has been this traditional safe haven, but this is really an like 19th century idea. And in the world where we are currently living in 21st century where the money moves across the globe 24/7. Bitcoin becomes like a global barometer of the sentiment across the globe. It prices in things immediately. There is no time to wait. It doesn't wait until, the stock market opens or whatever, or something like that. So in that sense, Bitcoin is just 10x better than anything else. And here specifically in an environment where you have geopolitical tensions around Iran, around Russia, different problematic areas and different tensions between countries, we may think that this will continue and intensify moving forward. So all those geopolitical tensions, we will have more of that. And in that environment, what is the asset that you really want to own? Do you really want to own something that you cannot, good luck taking your gold and pulling it into your pocket and trying to make it through the airport? Are you going to be holding this piece of metal, the dead rock, or are you just, will you just memorize 12 English words or 24 English words and you can move anywhere with that, with your stack in your head? So it's just next level, and it's because of that permissionless aspect. This is the asset to own.
Yeah, definitely don't want gold at the airport. ICE is there now. I was there the other day. I'm not letting them take it. And, Frank, I want to know, same question for you. Is this just happenstance that we're seeing Bitcoin surge right now and equities and gold fall? Or is this maybe an important inflection point that we'll be looking back on at some day and being like, this is where the flippening happened? What are your thoughts?
Yeah, it could be. I try not to attach a narrative to things. I think we're narrative creatures, human beings.
That's a real reporter right there.
We just, or maybe I'm not good at my job for that reason. No, actually, it's good. It makes me think, actually. But I think, I try not to do that only because we don't necessarily know what moved the markets, but it would not surprise me if people in the Middle Eastern region were realizing, yes, I cannot leave here with my gold as readily as I can leave here, as Piotr perfectly said, with my 12 to 24 numbers in my head. Or even if we wanted to be a little bit more generous, written down somewhere that I hid somewhere on my body, that, there's been plenty of stories of people leaving regions with that, or even your hardware wallet is easier to take than a few bars of gold. So different ways to do this here. And I think that that's becoming a thing. And I think Bitcoin, while its liquidity is still nowhere near the liquidity of gold as far as the market cap, it's definitely more than it was a few years ago, a few years before that. So I think that, yes, people might have to feel that pain of it being a bit more volatile, but at least they were able to leave with something that's incredibly portable, easy to travel with them, much unlike anything else they would be able to take, including potentially access to a stock market or somewhere else where they're investing or trying to store wealth. We don't know what can happen with that. We saw something when this war just got underway where I think it was the stock market in in the United Arab Emirates was shut down for 2 days. Now, in a situation like that, if you had an emergency and you needed to sell some assets because you needed liquidity and the market is closed, there's nothing you could do. The one thing that I think is also worth mentioning is that Bitcoin trades 24/7, which is why it's also that global barometer, as Piotr mentioned. It's a thing that essentially is pricing everything in real time. And so what exactly it's pricing, what exactly the market is digesting and showing us through Bitcoin, I don't know for sure. Is it in part the fact that Bitcoin is a great portable asset that you could use to transport your wealth? I would say yes.
And that's why you're the journalist here, Frank. Well put, well put. And, guys, we're seeing inflows right now into Bitcoin ETFs, while gold ETFs are seeing outflows. So that would kind of suggest that institutions are making a pretty deliberate shift here. So, Piotr, what do you think is driving that? Are institutions chasing performance, or are they actually starting to trust Bitcoin more than traditional hedges? Any thoughts on that?
Yeah, so I think this is a complex picture. The gold has been on the run for multiple weeks or even months now, right? We reached all-time high in gold prices, then silver followed. I mean, and this is almost like this has been a trade that's been going on for many months now. This has been only going up for those few months. And whereas in Bitcoin, we've seen a mixed picture, we've seen outflows and inflows. What I think, my personal opinion, what I think is happening because of that situation, if you think about the potential closure of Strait of Hormuz, where, most of the oil comes and is being supplied to the rest of the world. If that choke point materializes and you basically don't have access to oil as easy as it was before, then, because of the oil, it's basically the energy and the whole world runs on oil. Then if you cut this off, if you strangle the supply of oil, then basically you raise the inflation all across the board for everything, because there's the energy level or the oil price is like the foundation for everything, for transportation, for the whole industry, for literally everything has some kind of energy component in it. So that would raise the prices across the board. That puts like inflationary pressure, and that in turn puts the pressure on the Fed to keep the rates and not lower and not introduce the quantify easing. So I think what's happening that didn't materialize really. A market got scared a bit for a moment, and that's why it was fly. But then the moment we realized that that won't happen, or that's unlikely. Maybe there will be a peace plan after all, the 15-point one. So then Bitcoin rebounds immediately. But again, this is just a narrative. Probably, I think that my reading of a situation is like the oil or energy component is just part of it creates the prices everywhere, and everything that we consume or use has this energy component in it. So those shocks on the oil are rippling through the whole economy, and then Bitcoin is basically first to react.
Yeah, I mean, energy has really been the name of the game, especially with all these AI data centers popping up. In fact, I actually heard, I was home in Chicago this weekend for my brother's wedding. They are talking about recreating in Chicago, and this is real, 2 buildings that are replicas of the Twin Towers that would be AI data centers just for the 2 of them. So like energy, as we know, is becoming the name of the game here. But I want to bring it back here to gold for a second. And I want to talk, I'm going to get your thoughts on this one, Frank, because gold has had the edge traditionally, right? Because it was stable, it's been around forever, it's been universally trusted. But Bitcoin has some big advantages over it that we're all aware of. Speed, portability, it trades 24/7 as we talked about. So Frank, in a world where markets are moving minute by minute, do you think those advantages are starting to outweigh gold's history, especially during moments like we're seeing right now?
I do. I will say one thing, though, that I did think was interesting, and it came to mind as you were asking this question. I think it was Demir's posted something on X last night about the largest gold on-chain transaction. I think it might have been trading Tether's tokenized version of gold or something like that. So I think that what you're seeing in something like that is, yes, there are limitations to the way that gold is normally traded. Now, granted, it's trading 24 hours a day, depending on what part of the world you're in. So it's constantly trading, but not in all markets. Maybe that changes when there's more on-chain versions of it. I don't think we're quite there yet. I don't think people quite trust the on-chain systems as much as the legacy systems. But I do think that there is something to be said around the traditional system being a bit more static, harder to access, maybe when you want to access it. And given that things are changing minute by minute, and this tends to be the way, this is kind of Trump's strategy. Things are just constantly shifting. We're constantly in a bit of a chaotic state, if you will. And so I think that people people want to have that access to moving in and out of a position. Not something I would necessarily recommend. Not that I'm here to offer financial advice or anything.
Yeah.
But if you think you're gonna sort of beat the market with your technical analysis, that stuff kind of goes out the window when we're dealing with like governments fighting and posting stuff on social media and everything else. Markets are reacting in real time, and I think maybe there's just a certain amount of people feel like they have a little bit more power if they have an ability to access or trade that asset that they're using to hedge with more frequently than the other one.
Yeah, absolutely. And when it comes to trading and holding, specifically holding Bitcoin, I got to say, I know Zappo Bank does it about just as well as anybody else. And Piotr, we always appreciate you joining us and sharing your insight and expertise. I'm sure, as always, you've gained at least a couple of new fans in our audience this morning that are looking to learn more about you and what the team at Zappo are up to. So for those people out there, what's the best place I can send them where they can learn more about what the amazing products you and the team at Zappo offer, and where they can see what you're up to and what hot takes you got on the old interwebs? Where can they go?
Yes, definitely check out our website, zappobank.com, and also check out our X profiles. I mean, we are posting on X, both from Zappo and ourselves, and for more insights on what we are doing. We've been at Fort Knox of Bitcoin for a while now, and we haven't been hacked. We haven't lost even one Satoshi since the very foundation back in 2013. So I think we have a track record too. Especially in the crypto industry, if you say like, if you've been 15 years in space, it's just like, whoa.
Yeah.
There were so many companies coming and going meanwhile, right?
Yeah, no, your guys' track record certainly speaks for itself. So I definitely encourage our audience to check them out over at Zappo.com. Piotr, always a pleasure having you on the show. So I want to thank you so much for joining us, and we hope to see you again very soon, my friend.
Thanks for having me, Hank.
Cheers. Always a pleasure. All right, we're going to be taking a quick break here at RoxomTV News. But when we're back, Frank and I will be returning to make sense of all of the madness. So stay tuned. We'll be right back after this quick break. Welcome back. We're following breaking news this morning as Iran has just announced 5 conditions to end the war. Here's what they're asking for: a complete halt to all strikes and assassinations, guarantees the war won't be reimposed, reparations, an end to the war across all fronts, including all regional resistance groups, and international recognition of Iran's sovereign authority over the Strait of Hormuz. Iran says talks won't happen until all 5 are met, and that it won't accept a ceasefire, only an end to the war on its own terms. A change of tone after Trump declared yesterday the U.S. was dominating Iran. Take a listen.
I don't like to say this. We've won this. This war has been won. The only one that likes to keep it going is the fake news. I mean, the New York Times, you read the New York Times, it's like we're not winning a war where they have no Navy and they have no Air Force and they have no nothing. And we literally have planes flying over Tehran and other parts of their country. They can't do a thing about it.
Yesterday, the Pentagon ordered 2,000 to 3,000 paratroopers to deploy to the Middle East, drawn from the immediate response force that can mobilize anywhere in the world within 18 hours. Combined with 2 Marine units already moving toward the Persian Gulf, we're talking 6,000 to 8,000 U.S. ground troops arriving in close proximity to Iran, on top of the 50,000 American troops already in the region. And this comes as Trump's 5-day pause on power plant strikes expires Saturday. More than 4,300 people have been killed since this conflict began in late February. And let's move on to the next story here. As diplomats talk about peace, Iran is charging admission to one of the world's most important shipping lanes. In the Strait of Hormuz, we've been talking about it extensively this morning, vessels are reportedly paying up to $2 million per voyage to pass through safely, with Iran's Revolutionary Guard collecting fees in what looks less like regulation and more like a wartime toll booth. At least 2 ships have already paid. India has moved LPG tankers through, and countries like Japan and China and Pakistan and Malaysia are now negotiating directly with Tehran for passage. Iran's parliament is even drafting legislation to formalize these fees as part of any post-war settlement, which would turn a temporary tactic into a long-term revenue stream. The U.S. is pushing back, insisting the strait must remain open without conditions, while allies quietly paying the toll are undermining that stance in real time. India has already protested, pointing out that international law doesn't allow this kind of control over a global waterway. But enforcement becomes a lot harder when ships need to move today, not after a legal debate. And this is where it hits at home, because every tanker that pays that fee adds pressure to global energy costs, which eventually show up in gas prices, shipping costs, and pretty much everything that relies on moving goods across the planet. Over in Brazil, they're signaling that the global scramble for resources is about to get a lot more political. President Luiz Inácio Lula da Silva made it clear he will not allow foreign powers to take control of Brazil's rare earth and critical mineral reserves, a statement widely read as a direct warning to Washington. Brazil holds some of the world's largest deposits of lithium and rare earth minerals, the same materials that power EV batteries, advanced weapon systems, and the semiconductors running basically everything. Now, this comes as the U.S. ramps up pressure on resource-rich countries to open access to these minerals, part of a broader push to reduce reliance on China's dominance in the space. Lula has been increasingly vocal about what he sees as a modern version of resource extraction, warning that global powers are once again trying to control developing nations through their natural assets. And when you look at recent U.S. moves involving Greenland, Venezuela's oil sector, and even pressure around strategic infrastructure like the Panama Canal, Brazil is clearly reading the trend and drawing a line early, because this isn't really about mining, it's about who controls the supply chain for the next generation of technology. And Brazil is making it clear that if you want in, it's going to be on their terms, not yours. A bill designed to protect children online is now raising alarms for giving one politician sweeping control over the internet. In the United Kingdom, the Children's Wellbeing and Schools Bill is back in the House of Lords after lawmakers rejected a full social media ban for under 16-year-olds earlier this month. What replaced it, though, is something civil liberties groups find even more concerning. The updated version would give the Secretary of State, currently Liz Kendall, the power to restrict or ban access to any internet service for children, potentially even under 18-year-olds, without going through Parliament or regulators like Ofcom. Now, that authority could extend to limiting VPN use and enforcing age verification systems like face scans and ID uploads, which are already becoming standard across large parts of the UK's internet. The Electronic Frontier Foundation called it a massive expansion of executive control, and the Lords now have to decide whether to accept it or send it back for revisions. Because while it's being framed as child protection, the real question is who gets to decide what people can access online, and whether that decision should sit with an entire legislative body or a single office with a very powerful off switch. All right, we're bringing Frank back to talk about some of these stories. So Frank, this bill we're seeing in the UK is being sold as a way to protect children online. But when you look at it, it kind of gives the government officials the power to restrict access to entire parts of the internet. So where do you land on that? Does intent justify the scope here? Because this seems like it could be a bit of an overreach. I'd love to get your thoughts.
Yeah, I think you hit the nail on the head there, Hank. As you tend to do.
Every now and then.
Quite good with that hammer. So I think we're in a really bad situation in the UK. I frequently speak with Susie Ward, who's a host here at Roxom.
Love Susie.
As well as Freddie New, one of her partners at Bitcoin Policy UK. And they do a lot of work, not just around Bitcoin, but around privacy, people's right to use the internet without everything being surveilled and monitored, and there being KYC for everything. And I've done a lot of covering this myself. And when I see headlines like that, I want to open this window to my right, jump right out, and just give. Because it's,
Please don't, Frank. I need you on Wednesdays, buddy.
It just feels like too much. It feels like every time we're making some sort of progress around privacy, we get a new bill that comes out framed as if it's, of course, protecting you. It's always protecting you. They always know what's best for you, and they always start with children, so that we can't have the children doing this. But then, you know what? If it's good for the children, why isn't it good for adults? Let's extend this to adults and what's happening there. So I think we're watching that play out yet again in the UK. I mean, I don't know how real all the videos are. I don't trust all the videos that I see on the internet, but there does seem to be there's some legitimate reports of people being arrested for cursing on the internet or whatever. And it just seems like this overreach is just it's just wild in the UK. I think there's a little bit less of it here in the United States. We know that in other parts of the world it's even worse, but we have heard leaders in places like Canada and other parts of the Western world say that they want things to resemble more like what things look like in China, which is just complete control over everything that everyone says and does, especially in the digital realm. I'm personally not here for that. I'm going to continue to cover stories and to advocate that we don't move into a world where that does not become the case. But unfortunately, it seems like we're moving more and more in that direction.
Yeah, as the English would call it, this could be a slip and scoop, which is the UK equivalent of a slippery slope that I just made up. Maybe it's real, I don't know. But yeah, I mean, this could be we could see some overreach very quickly here. And as I think it was Reverend Lovejoy's wife on The Simpsons would always say, we must think about the children. We must save the children. It's always positioned that because that's something that we can all agree on, right? We got to protect the children. But with that being said, as you and I know, there's always that trade-off between safety and freedom, especially when it comes to kids online. So, Frank, in your view, is there a version of this that might actually work, or does it inevitably drift toward overreach? What are your thoughts?
I think we already have a version that works. It's an important question. I have my oldest sister. Her oldest child is about 12. Just got her first phone. The child, not my sister, and she's been using it with adult controls put on it. She can only if she wants to download an app, my sister has to approve that. So I'm all for that. That's just good parenting. That's a mother taking responsibility for what her daughter is using on the internet, viewing on the internet, what she's allowed to use and view on the internet. And I think that those sorts of safeguards are great. It allows the parent to choose what a child should see. And it seems to be, based on the conversations I've had with my sister, working. Do we need the nanny state or state, people above that to start saying that your daughter shouldn't see this or that? Sure, there maybe are certain things that children just should not see. Ideally, parents would not want them to see those things either. But I do think that we have to we have to allow parents to make that decision, what their children see. Ultimately, I think this is a decision that needs to be made at that level, not at the governmental level, because again, not so much because even the government's going to get it wrong for children, but because any sort of power that they assume in this sort of situation can then be applied to adults. We can't have this. It's not good for psychology. It's causing depression. You need to be on, different SSRIs now because you've been looking at this. We're going to take it away and we're going to put you, I'm spiraling here, but I'm trying to prove a point. I think it's just a dangerous slope where, human agency, the ability for people to make decisions regarding what they see, and this is presupposing that it's great to see footage of war every night on the news and the amount of violence we consume in movies and everything else, right? It's just like, who's making all those decisions? So there's so much here that I think needs to be talked about. I think, unfortunately, what makes me sad is a lot of people don't talk about this because money is tight these days amongst many families. They're not necessarily thinking about broader things like this, like are my rights to use the internet being taken away? Are my children, and I think it's sad for me to see when I bring this kind of stuff up around the dinner table. When I see my broader family, they're always just like, oh, you're always worrying about this and that and blah, blah, blah. It's like, okay, again, don't really want to give up on this stuff, but you're all not making it that easy for me here. So gotta, trying to stay sane amidst the chaos here.
Yeah, I mean, if they're not worrying about it, someone's got to, and I'm glad I got you worrying about it, Frank, because I'm worried about it too. But I'm glad to hear your sister is doing what everybody should be doing, and that's taking accountability for their own lives and the lives of their families, not waiting for the government to impose their hand of God on us to do whatever they want. I prefer that. I agree with you. And, Frank, you yourself have spent a lot of time reporting on things like censorship, free speech, and government overreach. So when you see something like this, does it feel like a one-off policy or part of maybe a broader global trend in how governments are trying to control digital spaces right now?
Yeah, I try not to put on the tinfoil hat too readily. Sometimes it feels like you kind of have to put it on, though. I know that
just a little bit.
I know that you put yours on from time to time, Hank. So
yeah, I do.
I get where I'm coming from here. But yeah, it does seem like they're looking for, I say they as that big monolithic power that be, whatever it is. They're looking for whatever entry points they can find. The UK has proven to be a really good entry point. In the US, I think that there have been some entry points, though I think it's been a little bit harder. But I think that they're looking for any entry point, and I think they're looking to highlight the places, even if it's under authoritarian regimes where it seems to be like, look, it's just safer. Look what China's doing. Things in China are better. The crime rates are lower there than blah, 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 blah. So it's always done in the name of safety. And I'm all for safety. Don't get me wrong. I want people to be safe. But the other side to all this is that everything is a trade-off in life. There's freedom, there's safety. If we want just everyone being surveilled all the time, people don't understand over time what that does to people's psychologies. It makes them less expressive. Also, I was studying to be a therapist for a while. The opposite of depression is not joy or happiness, it's expression. So You change that prefix. So if you put people in a world where they feel more and more inhibited because all of their expression is being monitored, you have a tendency then to make people feel more depressed. I don't want to go too far down that rabbit hole, but this is the type of things that I think about. I try to bring this stuff up with people, but a lot of people, even friends of mine who are quite smart, are just like, I'm like, no, text me on Signal, stop using SMS. But nah, I don't really care. Anybody can see my, okay, sure. I can't stop people from doing that. I could just say that I think ultimately one day something will be leaked about them, whether it's private financial data or a personal text, whatever it is. And then unfortunately, they'll probably learn the lesson the hard way. I don't wish that upon people. I wish intellectual curiosity and a desire to protect their rights would bring them to this, but that tends to not be the way that it happens. So maybe people just aren't in enough pain yet. Again, don't wish it on them, but maybe that's going to be the thing that ultimately wakes people up a bit more.
Yeah, I hate to agree with you on that one, but I think that's exactly it. People just don't pay attention to things until it hits them at home, and unfortunately, I think that's just kind of part of human nature. And kind of staying with that, from a journalism perspective, Frank, if governments start having more control of, or centralized control over access to information, what do you think that means for how people discover news and how stories like this even get covered or challenged in the first place? Because you said people aren't thinking about it, but if we're not thinking about it now, it's one of those things that slowly over time, the system that we have been accustomed to is going to kind of erode and become replaced with something else right underneath our noses if we're not paying attention. So again, just to reiterate, like, how do you feel like this could change if we're not paying attention to these things happening in real time? Where could this ultimately go?
I think we just get more stuff that shocks the reptile brain, and by the reptile brain, I mean the shock and awe, and it produces a situation where everybody is always monitoring the situation. We don't want people monitoring the situation. We want people touching grass. We want people going outside. We want people spending time with their family. Certain people have to monitor the situation, maybe journalists, people who work for the government, whatever. But this idea that we all need to be glued to our devices all the time because the new catastrophe is going to happen any minute now, and I need to bet on it on Polymarket or Coinbase or whatever.
Hey, I didn't need to catch that stray there. Okay.
That was it. That's what it is. You need to, and that I just think that all that stuff is essentially, it's all feeding upon itself. So like in journalism, they say if it bleeds, it leads. It's that sensationalism. It's that, oh my goodness, look at this violence. The world is such a terrible place. Oh, I better just hand my power over to people who know better, to the people who say this should be censored, that the internet should be censored, because they obviously know, look at all this chaos in the world. But most people aren't understanding that the same people who are then going to be censoring you are the same ones that are feeding you that chaos. So it's quite a situation. If it sounds like I'm being dramatic to people, I apologize. I'm really not. I think I just want peace for human beings, and I want people to go back to, again, like touching grass, being in the real world with each other without being preoccupied with monitoring the situation all the time.
Yeah. And how do you feel like this is going to affect like on a country to country basis? Do you think it's going to be, we're going to have some countries that are, more concerned about having control of these centralized informations, like we're seeing like the North Koreas of the world, or I think Russia's got pretty good control over their access to in China. Do you think that's something we're going to see become more prevalent over time when there might be other countries that go the opposite way? Or is it in, a nation's best interest to control access to information, even here in the United States?
Yeah. I don't see anyone going the opposite way, to answer that question in short.
Yeah.
I see people moving in that direction, some faster than others. That seems to be the general trend. Does it mean that that will always be the trend? No, I don't think so. I think people don't like being put in cages, and when they realize they have been put in cages, you're going to see people push back. There are breaking points for human beings. People don't just like to be herded and you go over here and do this. And I think you're seeing that at least in the Bitcoin space, which is something that is constantly growing. The amount of people who are actually waking up and understanding what Bitcoin is when they hold their private keys and they're like, oh, this is different than all other digital things in my life. This is actually mine. I think that starts to change people's psychology. It gives them a different emotional experience. And so I'm seeing that not only in the United States, but I'm seeing that across the planet. So right now, I think governments are trying to continue to sort of get away with things the way that they always have been able to. And I'm not saying that, and like, again, that's not a tinfoil hat sort of thing. Bureaucracies exist to perpetuate themselves. They get a certain amount of power. They use that power. They keep using it. And unless that power gets checked, they're going to continue to accumulate power. Bitcoin is an inherent check on that power. And what changes with Bitcoin is not just the fact that people own their own money and have control over it, but their psychology. They start thinking about privacy. They start thinking about P2P rights. They start thinking about all this other stuff. And the government over time has to react to that. They have to respond to that. And if the response isn't good enough, there are going to be issues. The pushback, I think, will continue until people get what they want.
Yeah, well, I got what I want today, Frank, and that was having my time with you on the show. It's always an absolute treat, so I want to thank you for stopping in this morning. And like I always say, you're doing God's work out there, actually getting the hard-hitting stories that showing how these changes in the world truly affect people rather than just the kind of the broader landscape. So for everyone in our audience that I'm sure is like, man, Frank really knows what's up, and he does, where can I send him to get more about what you're talking about, where your hot takes are? Tell him where to go.
Yeah, absolutely. You could get me on most of my stuff I share on X at Frank Corva, just at Frank Corva. Noster, same thing, at Frank Corva. Don't follow my old account, follow my new one there. Substack, frankcorva.substack.com, and then New Renaissance Capital. And also, you had my boss on, Obi from Fedi. So I work with Fedi as well, and I just published my second community spotlight piece on the work that the team at Motive Peru is doing with the 16 Bitcoin circular economies they've established in Peru. Amazing, amazing work. And then my podcast, New Renaissance Capital. I know that was a lot, so just check me out anywhere. But X, I share all of it through X, so make sure you're following there. But again, trying to highlight stories that bring people hope. It's not all doom and gloom. Governments, the system, it's not monolithic. People are making really substantial changes in the world on a day-to-day basis, and I'm here to highlight that. So thank you.
And we appreciate you bringing that hope to us in this what's becoming an ever more volatile and increasingly dire landscape out here. So like I said, Frank, always an absolute treat having you. Thank you so much for your time today. And everybody, do yourself a favor and check out what Frank is up to online. Frank, I'll see you next Wednesday, buddy. Such a pleasure. Thank you for joining us.
Talk soon. Bye-bye.
Cheers. Bye-bye. All right, we're going to continue on here at RoxomTV News, because if you've ever wondered what it would actually take to hold big tech accountable, well, the answer might be less than a day's revenue. You see, Meta's stock rose 5% in after-hours trading after a New Mexico jury ordered Meta to pay $375 million after finding the company knowingly misled users about the safety of Facebook, Instagram, and WhatsApp while allowing child sexual exploitation to happen on its platforms. Yikes. It's the first jury verdict of its kind against Meta, and on paper, it sounds massive. Until you realize the company made more than that before lunchtime. The 7-week trial laid out something far more uncomfortable than a typical corporate misstep. Prosecutors showed that Meta knew its platforms were being used by predators and still failed to implement basic safeguards. Listen in.
Meta knew not only what was going to happen, but it saw what was happening unfold in real time. In every one of the documents that we've gone through, Meta saw what was happening to kids, whether it was Molly Russell, whether it was kids in New Mexico, subject to sextortion or CSAM. All of that is harm that Meta documented internally.
Now, these internal documents reveal that employees had repeatedly warned about widespread abuse, including one moment where Mark Zuckerberg's 2019 push for end-to-end encryption on Messenger would eliminate the company's ability to report millions of abuse cases to law enforcement. And the company moved forward anyway. The jury, well, they didn't hedge. Meta was found liable on all counts, including unfair, deceptive, and unconscionable business practices, with jurors assigning the maximum penalty per violation across thousands of instances. The next phase of the case will seek additional financial penalties and court-mandated changes to Meta's platforms, including effective age verification, removal of predators, and protections for minors in encrypted communications. This was Meta's lawyer's defense. Take a listen.
I think it's really important to know that most people are already aware of the risks of social media, either because of common sense, because of their own experience on the internet, because of what their friends and families and teachers tell them, what they see on the news. Meta isn't hiding anything about the risks of the platforms. It discloses them everywhere. The state, in order to get one penny, must also prove that Meta's conduct was willful. So, if the state wants any penalties at all, not only does the state have to prove that Meta knowingly made a misstatement, it must prove that Meta intentionally did so with knowledge that harm may result.
And given that Meta's stock rose 5% after the verdict, the market's take is pretty clear. $375 million isn't accountability, it's a cost of doing business. Well, gang, that's a wrap for our business here today at RoxomTV News. I want to thank all of you for tuning in and sharing this morning with us. If you haven't already and you want to keep up to date on everything that's going on in the world and have a better understanding of how it actually impacts you, I would encourage you to follow us on all social media platforms. You can check us out at RoxomTV, RoxomTV News, and me at Hank at RoxomTV. We are literally on everything: YouTube, TikTok, Instagram, Rumble, I think even Blue Sky. We're on everything. So make sure to like, follow, and subscribe if you haven't already. You won't regret it, and you'll be the smartest one of your friends. And don't we all want to be that? I, of course, am Hank Hudson. I'm your host. We'll be back tomorrow, Thursday, at our normal time of 8 a.m. PST to 10 a.m. PST. Again, we are 8 a.m. to 10 a.m. Tuesday through Friday. Mondays, though, we're 10 a.m. to 12 p.m. Next up here at RoxomTV News, we got Joe Nakamoto's show starting. He is one of the best Bitcoiners in the business. He's always bringing the heat. So I very much encourage you to stay on board here at RoxomTV because we got more awesome programming coming your way. And again, we'll be back tomorrow morning with more RoxomTV News right here for you at RoxomTV. So thank you so much for tuning in. And until tomorrow, stay safe, stay informed, and I will see you boys and girls Thursday morning. Cheers, everyone.